Welcome to the session on Equitable AI for Inclusive Finance. My name is Sarah Corley. I'm CEO of the Alliance of Digital Finance Associations, and it's my absolute pleasure to be the moderator for today's session. AI is something that I find incredibly fascinating, but being also honest with you all, kind of a little bit overwhelming too. There's so much to know about it, understand about it, and also really then starting to, when you think about how we can do this responsibly, to make sure that we're not leaving those who are already underserved or and not being included formally, leaving them behind even further. That's something we definitely don't want to do. So I'm incredibly delighted to be joined by two special guests today who know way more about AI than I do, and it makes me feel very comfortable that I'm sharing a platform with a person who I've now come to know as a friend. She's been with me on many pathway conversations and many webinars. So welcome, Alex Rizzi. It's great to have you with us. So Alex is a Senior Research Director at Centre for Financial Inclusion. And it's also been a great pleasure for me to meet for the first time in this process of doing this today's session, Lucciana Alvarez. Lucciana also is at Centre for Financial Inclusion, and it's great to have you both with us on the call today. It started really because you guys put together such a really sort of a series of different articles, papers, research that I picked up on LinkedIn. And just for all those participants watching, LinkedIn is such an amazing place. If you're not on there and you're not going there regularly to spot these new articles, please do. That was where, this whole conversation started, really seeing what was being produced, seeing some of the challenges and the issues, and trying to really help us think more about, AI is inevitably coming towards us. It's already in our current reality, let alone our future. And I'm really keen to hear how, as a digital finance profession, we can do our bit to try and make sure that we use it responsibly and inclusively. So I'm going to now hand the floor over to Alex and Lucciana, who are going to talk through some of the research and activities that they've been doing and help us understand a way forward for the profession. Over to you both.
Thanks so much, Sarah. It's a pleasure to be back at Pathway, and thank you to DFI and the Alliance for the invitation. We're really keen to share what we've been doing. As Sarah said, I'm Alex Rizzi, Senior Research Director at the Center for Financial Inclusion. I'm just going to share my screen. Can you give me a thumbs up if you can see it? Okay. And really happy to be here with my colleague and co-author on the publications that we'll be talking about today. So just briefly, CFI is a think tank that's housed within Axiom International, and we conduct research and advocacy to improve inclusive finance for low-income individuals around the world. And we have 4 thematic priorities: women and financial inclusion, green inclusive finance, consumer protection, and responsible data practices. And that latter area is where this particular project stems from. And we've worked on issues around privacy, digital data rights, AI, all with the intent to bring more accountability and transparency to these systems that are increasingly driving digital finance, and to make them more decipherable and understandable to different stakeholders. So we've been doing work around responsible AI since 2021 at the provider, policy, and consumer levels. And as Sarah was saying, despite the hype that generative AI has generated in the last year, AI has been transforming inclusive finance for quite a few years. And when we center the use of data and AI and inclusive finance, you see this convergence of advanced analytics with the unprecedented amount of digital consumer data in emerging markets, largely driven by mobile phones and unprecedented amounts of digital data trails. And COVID really put that trend on high, on steroids, I guess you could say. And there are all kinds of use cases that are already, being deployed by, I'm sure, some of the participants today and their companies and their partners, whether it's around credit risk assessment, personal finance management, and chatbots and customer service. And you really see that the efficiency that AI can enable can create more viable business models to reach the historically underserved, in part by enabling higher volumes of low-value transactions. This has gotten the attention of investors. They've noticed this catalytic potential of AI in financial services, and we've seen just unprecedented amounts of investment from VCs and startups that are using AI in finance and insurance, especially over the last 10 years. But one thing to remember is that, that we keep top of mind for us is that AI is increasingly making or supporting really big, high stakes decisions for the consumers that we all care about, that we want to be included, whether it's which products or services are marketed to them and at what price, whether a loan is approved, whether an insurance claim is accepted, whether a consumer is flagged as a fraudster, or whether a small business gets access to a social protection payout during COVID, to name a few. And given the stakes of these decisions and their financial inclusion implications and the scale at which they can be made, as well as their inherent complexity, CFI has thought and long felt that they deserved kind of a closer look to understand some of the risks, but also potential ways to mitigate those risks. And if, the number of risks in terms of the use of AI are, there's sort of a plethora. On this slide, issues around privacy, transparency. With generative AI, there's a lot of concern around misinformation, and bias and discrimination. And sort of the project that we'll be talking about today will focus on bias, discrimination, and the intersection with gender. Like the use of data, bias is nothing new, unfortunately, in financial services. And there's even research that shows that AI can help mitigate against potential bias, that maybe discriminatory loan officers might have had in the past. But when you think about the scale and the scale of harm that an AI system could perpetuate, a biased AI system could perpetuate much greater harm than, let's say, a discriminatory loan officer. So really, again, it sort of merits a closer focus. And we've been thinking about this since 2021. We had a framing paper in 2021 that tried to kind of wrap our heads around what potential sources of bias could be and what the state of play was in terms of fintechs. And then we started to think more about bringing more accountability and transparency to these systems, to stakeholders that were in positions of influence, could influence the practices. And impact investors are a key stakeholder in terms of influencing the practices and behaviors of their prospective portfolio partners and existing portfolio partners. And we felt that influence model and the incentives that they bring for improving practices would be an important channel to explore in terms of bringing more accountability and transparency around responsible practices. So we were lucky enough to get funding from USAID to build this guide, which we launched about 2 months ago, and alongside with a brief for the wider industry. And I'll turn it over to Lucciana to talk more about the motivation for the guide, what's in there, and how we hope all of you can hopefully benefit from what we learned in the process and what's in the guide. So Lucciana, I'll turn it over to you.
Sure. Thank you, Alex. So this guide focuses on bias in AI in the fintech industry. And to understand better what's this problem, I would like to start with a case that happened in 2019. This year, Genevieve Smith, who is a researcher at UC Berkeley, and her husband applied to the same for the same credit card individually. Although she had better credit scores, similar income, household expenses, and debt than her husband, the credit card company set her a credit limit that was almost half of the husband. The story only echoes the headlines that were made the same year, like the one that I'm showing in the screen, featured by the New York Times, where many couples were complaining about the different credit limits that were assessed by the new credit card that was supposed to provide creditworthiness decisions automatically. Although couples were sharing the same bank accounts, filing taxes together, and living in the same zip code or neighborhood, they were receiving different credit limits. Indeed, husbands were getting 10 to 20 times the credit limit of their wives. later, when these couples were looking for explanation, it was very difficult for them to reach out to a human to answer their questions. Whenever they got like a human from customer service to explain exactly what happened, they didn't understand what was inside of the AI system. It was like a black box for them. And although the employees were ensuring that the system was not biased against women. Well, the case was investigated by the New York Department of Financial Services, which is a regulatory institution. And although this department didn't find that gender or race information was used by the algorithm, it did show that there were other variables that are correlated to gender that were explaining these differences in the decisions. The most important finding is that there wasn't a human present to correct this bias outcome, which is very normal in traditional credit or lending, no? And this is the risk of automation. There's a lack of human who can review the outcomes, and sometimes bias and discrimination can lead to exclusion, where more women are excluded from financial services or cannot access to the same economic opportunities than men. Or again, AI bias can lead to unfairness by asking women to pay higher interest rates than men, or providing lower credit limits or smaller size of loans for women than men. So this is the problem. These are the unfair outcomes that algorithm bias can lead. And whenever we want to answer, okay, if there is, what's the problem? What's the cause of the problem? CFI published the stories that algorithms tell. This is the framework paper that Alex wrote in 2021. And in this paper, CFI classifies the sources of bias into 3 buckets. There could be sources of bias inside the inputs, meaning the historical data or the new data that fintech companies are using. In terms of the historical data, if a company is using traditional loan approval rates or late payments or information about the size of the loans or the purpose of the loan, usually it will repeat the traditional patterns or the social norms that historically we have seen, where women are receiving lower sizes of loans or more rejections, etc. On the other hand, if we use new data like social media, phone usage, or geospatial data, sometimes this data also reflects some social norms and social problems where women are less likely to own their own device or have more fear to use the new technologies. On the other bucket, in the code, sometimes these algorithms, like in the case of the Apple credit card, are a complete black box. So it sometimes can have some problems that can lead to unfair outcomes. And in terms of the context, in the bucket of the context, having a lack of diversity in the AI team that is building the algorithm, like having only men, because again, men are more likely to have studied STEM degrees, or having had the algorithm built in the north, right, like in Europe or in the US, and using the same algorithm with a different sample in another context like Peru or Africa or Asia, this will lead to an unfair outcome. Another important source of bias is the lack of ethical principles or clarity on what's the mission of the fintech company. So having, for instance, a principle of fairness inside a fintech company can be more can lead to the use of like mitigation and detection of bias practices among the AI team. So once we understand what are the sources of bias, I think the next question is, why should investors care? Why should actors promote equitable AI? And to answer this question at CFI, we decided to compare what are the costs and benefits of investing in Equitable AI. So among the costs, from the story that I told you about Apple credit card, companies that are already using a bias AI, like what happened in Amazon hiring tool, or in Facebook and Microsoft AI systems, or the same Apple company, they have a risk of reputation costs and legal risks by facing by facing accusations of unfair outcomes. Once justice or decision is made, and they find that there is indeed bias in the algorithm, they will have to spend more money correcting the bias algorithm and retrieving the product from the market. At the same time, it has been shown that having this unfair outcomes could bring problems in the talent retention, as many AI teams are not motivated to work in companies that are shown to be or accused to be implementing bias AI. On the other hand, if we look at the benefits of investing in Equitable AI, we can see that it could improve for sure innovation, and with this could improve the quality of the products, increase the inclusion and therefore social impact, and at the same time it could reduce or prevent any type of cost related to what I say, retrieving the system or correcting the bias system. It also can help to improve the reputational benefits and the consumer trust. So now that it's clear that there's a business case for investing and promoting Equitable AI, this should be enough of a reason to say, okay, we as investors or any other type of actor, we need to answer or ask the right questions to at least understand what's the decision that the algorithm is making. So for this, CFI last year decided to do like an academic review, and also review over 120 practical guidelines related to ethical AI and fairness. And what we found, after also interviewing experts and doing a needs assessments to investors, we found that there is a trend that is the emergence of many technical and data science tools for bias mitigation and correction. But on the other hand, although there are plenty of technical tools that only data scientists can understand well, few investors are aware of these assessment tools, and few of them also can understand and use it in a practical case. So given this gap, CFI decided to develop a tool to guide investors and give them like a checklist or a conversational guide that they can use whenever they are talking to fintech companies and evaluating an investment. So we at CFI say that any investor or any other actor can assess the risk of harmful bias with 3 steps. The first step is to understand how the investee is using AI by asking some questions like, does the investee use AI in consumer-facing decisions? Or does the fintech company know and understand what's in the data set? What type of variables is gender included in this data set? What's the model doing exactly? Also, another question that is important whenever you're starting to assess a fintech company is if the investee's business goals and social mission are aligned to the impact investor's mission, right? If one investee is just focused on like profits and the impact investor cares about fairness, then this is clearly not a case that is good for investor to invest. inside this step, although last year we didn't include generative AI, we're starting to explore this topic, and I think it's important for investors to also understand what exactly are the insights that are generated by generative AI. Like many fintechs are starting to use ChatGPT, but in the blog that CFI published this year, we show that ChatGPT can have bias against women. So it's important to ask these questions. The second step is to assess the risk, the capacity of the investee to mitigate, identify, and correct bias and discrimination. And based on this framework where we divide the sources of bias in input, code, and context, there are certain questions that investors can ask. And the fact that the fintech companies say yes or no just means that, okay, there's some risk of bias, let's talk about it. It's not like a final decision of not investing in this fintech. So, for instance, in terms of input, it's good to ask, for instance, if the data science team has tested the data to ensure that it equally represents women and men. Because again, we know that women have been systematically excluded from the financial service. In the bucket of code, it's important to understand if the investee data science has checked if the model and testing process have provided different outcomes for women than for men. Or maybe one question before, if the data science team knows what's in the model. And in terms of the context, we know that, for instance, asking the question if the data science teams or the company teams have gender diversity can allow us to give us like more fair outcomes by the product of the fintech. The third step is to assess the potential of harmful bias in AI systems. And among the outcomes, we can see, given that the uses of AI can be grouped into credit and insurtech, financial advice, cybersecurity, and customer acquisition, there are like particular questions that we can ask. So, for instance, for financial advice, do men and women applicants receive the same type of advice or nudges? And again, coming back to the blog, sometimes they don't. Or in case of the cybersecurity uses, do transactions from men and women have similar likelihood of being corrected or flagged as fraudulent activity? So these are some questions that are guiding the conversation and aim to nudge investors and also to incentivize fintech companies to use more fair practices. So finally, once investors and fintech companies have talked through this set of questions during pre-investment and post-investment, investors can help provide some recommendations or condition their investments to the adoption of equitable AI practices. And these practices are related to, for instance, governance, establishing a corporate governance for responsible AI and centering fairness as one of the key principles. Or in the case of training, providing trainings and awareness campaigns in the companies so that the AI team, but also the lenders can understand and see why should we promote fair outcomes whenever we're assessing credit for two different groups. So with this, I'm going to hand it over to Alex. You want to wrap up?
Yeah, and I know we're getting short on time too. So just, thank you. Yeah, thank you so much, Lucciana. Great job. And we're just keen to hear thoughts from the group. And even though this tool was geared at investors, I think it's meant for non-data science stakeholders who care about responsible AI. So I think that would be hopefully everyone on this call as well. So I think some of the questions and the prompts would be relevant for everyone. So
I was thinking that exact same thing, Alex. There were so many questions there that, at different stages of the process, as we're thinking of introducing AI into your products and services, that we can just stop and ask or test or check, as a way of trying to prevent that fairly shocking example that you gave there, Lucciana, about, women still, we're still in 2023, yet still being discriminated against by lower loan sizes or higher interest rates, which stops women from being, an equal part of the digital economy, just as much as men. And that example is from the US, where you would sort of, think that perhaps, given that that's where a lot of the AI tech is developed from, that would be a place where that had been tackled, and clearly it hasn't. So looking across the globe, there's obviously clearly, some issues that we need to tackle. And I guess, we've just got a couple of minutes before we have to wrap up. So I'm going to ask you both to just very briefly, if you were going to encourage all the people listening to this call who are either gender equity change makers or, digital finance professionals, or in some ways, a little bit of both, what is the one thing that you would sort of, ask them to keep in mind, that when they go to their day jobs tomorrow, that they think about, that would help with, the introduction of and responsible use of AI? Alex, let's start with you first.
Yeah, I'll just start. I think one of the things that we learned, that we've learned through this process is, even though very few of us, are actually the data scientists, the builders, I think we all have a role to play, and we shouldn't let that kind of the complexity of these systems deter us from asking questions and learning. It doesn't mean that we're going to be building, in Python or whatever, or using all these new tools. But I think there are ways that we can engage with these conversations. We can ask about the data sources. We can ask about the diversity of the team. We can understand if the fintech is outsourcing, to a third-party vendor. Like, we can ask questions that I hope this tool will help empower people to ask. And that I would also say, from some of the data scientists we spoke to, I think they would, maybe there'd be some pushback, but I think some of them would appreciate additional stakeholders being part of the discussion. I think there are a few that told me in interviews that, like, the onus, like, we're making, the systems that we're building are making these huge decisions, and there's a lot of, they understand the implications of the models, and they, I think, would welcome additional stakeholders, even if they're not data scientists.
And I really enjoyed that slide that you had that had like input, code, context. Actually, the coding bit is actually only sort of one part of it, right? The bit that input, the data that goes in, but also the context. And incredibly, we can definitely, anyone can have an input and ask the right questions, particularly around context, even if they don't understand the actual, as you say, like the languages of Python or other, coding, areas. It is actually only one part of the three areas that we can have an influence in. Lucciana, keen to hear your one takeaway.
Yeah, so for me, I think it's important to ask questions. I think that, and also to keep informed. I don't think we should feel shy or overwhelmed by the new technologies, and they should be just seen as tools, right? So I think the failure, for instance, in the application of any AI system is just to believing that they are going to solve all our problems, and that's not true. I think we can not only let the AI system to make the decision, but also we have to check as humans and say, okay, these are the results. Are these results fair? Is this what I want to do with this? And I think there's a lot for any type of factor, for those who are creating or building the AI systems, those who are using the AI system, but also those who are trying to invest or regulate. There are questions that have to be asked. The other thing I think I would like to bring is the importance of diversity. I think whenever we're asking about the application of these algorithms, many of them have been, as I say, created in other contexts. So trying to adapt this tool to the particular country or context that you are where you are working is important, and I think that can help to mitigate a lot of bias, because sometimes the data sets that the technology have been built with are describing completely different populations. Yeah.
And I hear you both there. I think, we're going to have to wrap up, sadly. And I encourage everyone on the call, if you haven't read some of the work of Alex and Lucciana, please go ahead and do so. I think we've captured a couple of your key publications on DigiCampus. But I think, for me, one of the things that sort of really I'm taking away with me is what's exciting about AI, what's possibly inclusive about AI is its scale, its ability to make hundreds of decisions, thousands, millions of decisions incredibly quickly if we get it right, which enables low cost, and small loans, small insurance, etc. All those things that we know at the micro level that we need to deliver. AI provides us the ability to do that in an affordable way that makes those products and services make sense, and a business case for them. However, it is exactly that same scale that is its biggest risk. If it goes wrong, we're talking about millions of people potentially who have the wrong decisions, or are not included when they could have been, if that's not done well. So clearly, reputationally, morally, we should be doing our very best. And I love the idea of asking questions. I love diversity. Actually, like you said, the questions don't need to be asked by the person who did the coding. In fact, people who know less about it probably ask better questions and more interesting questions that really get the brain thinking as to whether this is as responsible as we can do. And also clearly feedback and learning. So, when things don't go right and we pick up that there is an issue, being able to pick up the issue first, because obviously that was clearly an issue in the case that you described, Lucciana. There was nowhere to report that issue to, or to, for the companies to act on when something wasn't quite right. And, continuing to change that, because obviously AI is going to be learning and new data is coming in, and we need to keep making sure that it remains as inclusive as it possibly can, and we're using it responsibly over time. And speaking of time, I must end it now, but thank you so much, Alex and Lucciana. I've really enjoyed today's session. I'm left with a new vigor of how I can really contribute to the use of AI by asking these questions. You've given me the confidence to be able to ask them, so thank you very much. And I hope our listeners also feel the same. Enjoy the rest of Pathway, everyone, and thank you so much.